Hi everybody, this is Lara with your end of the week video for US oil for the trading week ending Friday 17th of April. Price remains within that channel and exactly as expected, it just keeps on going down. I still have two targets. The first target is 12.82. If price gets there and the structure is incomplete or it just keeps on falling, then I'll use the second target, which is at 9.77. Elliott Wave analysis first, classic analysis last. I've had the lower target, 9.77, for quite a while, and after this huge downward month, it's not looking so extreme anymore now, is it? This structure for this bear market for oil is a double zigzag. The simplest Elliott Wave pattern is 5 steps forward, 3 steps back, and this is a 3 steps back, and it's labelled a double zigzag. Here's the first zigzag in the double. Often patterns will, or corrections will end at a first zigzag, but if the first zigzag doesn't move price deep enough, then a second zigzag may be required to move price deep enough. And sometime after this high, sometime in here, I think I had expected that we were looking at a double zigzag, and I had expected the second zigzag to achieve its purpose by moving price beyond the end of the first to deepen the correction. The second zigzag is labelled primary A, B, C, and it subdivides 5, 3, 5. Primary C needs to subdivide as a 5-wave structure. Let's take a look at this at lower time frames. From the monthly chart, this high here for cycle X is this point back here. Now we're looking at all of cycle Y, A, B, C. Primary C subdividing as a 5-wave impulse at intermediate degree, 1, 2, 3, 4, 5. It has to be a 5-wave structure. Within this impulse, this is the simplest Elliott wave structure. 1, 2, and 3 are complete. 4 now is complete, and it's remained well below first wave price territory. And now 5 has moved beyond the end of 3. It could be over here, but let's look at lower time frames to see if the structure of intermediate 5 is complete. Here's the beginning of intermediate 5. We could try and label it over here, but classic technical analysis remains bearish. The targets haven't been met, and I do expect more downward movement, although downward movement is starting to show a little bit of slowing and weakness, and that's pretty normal for a fifth wave. A fifth wave to end a C wave anyway. So the structure of intermediate 5 needs to be a 5-wave structure. So far 1 and 2 may be complete, 3 may be incomplete. When it arrives, 4 may not move into wave 1 price territory above the very short-term invalidation point. This channel is important. It's an Elliott channel drawn around this impulse of primary wave C. Draw the channel from the end of the first wave to the third wave. Place a parallel copy on the end of the second wave. The fourth wave found resistance within the channel. This bounce has found resistance. There are overshoots for the ends of third waves within downward movement. This is the strongest pieces of downward movement. And so this channel looks absolutely normal. This looks like the impulse has been drawn correctly. When this channel is breached by upward movement, that may be an early indication that the downward trend for oil may then finally be over, and we may then have had a trend change. In the very short term, if we see a new high next week above the short-term invalidation point, then this would be the Elliott wave count I would then more seriously consider. It's possible to label intermediate wave 5 complete. 1 and 2 are labelled in the same positions. 3, 4, 5 could have been complete down here. If we see a breach of the channel as I've drawn it on that first daily chart, not on the second one, and then a new high above this confidence point by any amount at any time frame, then I would more seriously consider this alternate wave count. A new low below this price point would obviously invalidate it, but the confidence point would still be important. At any stage next week, if we see a new high above that point, then I would consider a more bullish wave count for oil. At the monthly chart level, the completed month for March was a very, very strong downward month, and it has really strong volume actively pushing price lower and breaking below multiple support lines. I can't say anything about April because the month is incomplete. RSI reached oversold for March. It's back in neutral territory, but we don't know yet if it's going to remain there. MACD is fully bearish. On balance volume, the last signal it gave was bearish break below support lines, and ATR is increasing as price falls. There is strength in downward movement. This is the weekly chart, and this weekly candlestick from stock charts doesn't look right. I think the data from bar chart is more accurate, and I'm questioning stock charts data. This downward week here has made a new low. Price has made a slight new low at least, but there's bullish divergence between price and RSI. But I can't really give that much weight because I don't think the data for this week is accurate. Volume is declining as price is falling. I may give a little bit of weight to that, and I would expect that possibly toward the end of a trend. ADX now indicates a downward trend which is not yet extreme. The ADX line is below 35 and not above both directional lines yet, so there is room for the trend to continue. ATR still increasing. There is strength in downward movement. And this is why I'm a bit suspicious of that weekly candlestick. These two candlesticks from stock charts have got a $7 difference to bar chart data, so one of them is likely not accurate. It looks like price is falling of its own weight. As volume is overall, it looks like it's declining as price is falling. ADX is declining, telling us that the previous downward trend, which reached very extreme at this time frame, may be over, and there is a potential trend change to upward, although these two higher candlesticks may have interfered with that signal. ATR is overall flattening off as price falls. There is now some weakness. On balance volume, the last signal it gave was bearish. There is longer term bullish divergence developing. If we see, I don't think that the last couple of days is accurate here for RSI though, but we would still probably be seeing some mid to longer term, or mid-term really, bullish divergence developing between price and RSI. The downward trend is reaching at this time frame, maybe reaching its limit. And when RSI reaches deeply oversold and then starts to exhibit mid-term bullish divergence with price, that's a warning that the downward trend may be reaching its end. That's all for me this week with your oil analysis. I hope that all of our members are staying home and staying safe.